current assets are assets that are expected to be converted into a cash or consumed within 1 year or within the operation cycle of the business, whichever is longer. They are typically listed on the company balance sheet and include items such as cash, account receivable, inventory, and also prepaid expenses. So we have two types of the current asset. The first one, we have the permanent current asset and also the temporary current asset. The permanent current asset, these are the minimum level of the current asset required by a firm to sustain its ongoing operations. They are not directly tied to seasonal fluctuation, but they are essential for day-to-day functioning. So we have in this permanent current asset, we have the cash and also inventory. The second one is the temporary current asset. These are current assets that fluctuate with seasonal or other short-term variation in business activity. They are not essential for ongoing operation but are needed to capitalize on opportunity or meet temporary increase in demand. For example, we have seasonal inventory and also seasonal account. Next, the current asset investment policy. We have three policies. So the first one is the conservative policy. It's prioritize liquidity and safety. It suitable for risk-averse company in volatile environments. The second one is aggressive policy. It focuses on maximizing the return with higher risk and ideal for growth-oriented firms with predictable cash flows. And the last one is the moderate policy. The balances liquidity and profitability, fitting for company seeking a middle ground approach. So in this situation, we have choose the moderate current asset for the Kilia Berhad. So why we choose the moderate current asset? We choose this current asset investment policy because it offers a balanced approach to addressing current challenges and improving overall performance. So by keeping the reasonable cash on hand, it's meet daily operation needed and unexpected expenses. The last reason is the terms of inventory management. Hold enough inventory to fulfill the customer demand while avoiding the cost associated. So, for overall, the moderate current asset policy provide Kilia Berhad with the flexibility needed to navigate market fluctuation and capitalize on the growth opportunity while mitigating financial risk. By implementing this strategy, the company can enhance the operation efficiency, improve profitability, and achieve sustainable growth in the competitive shoe manufacturing industry. It ensures that Kilia Berhad maintains stability and resilience in its financial management, critical for achieving its long-term business objective.
So, what is short-term financing? Well, short-term financing refers to the use of credit that it repays in 1 year or less. It is typically used for less than 1 year and is essential for managing working capital, addressing cash flow, shortage and handling unexpected expenses. In business, it also known as a working capital financing. This type of financing normally needed because of uneven cash flow into the business. So as you can see here, this is the sources of short-term financing. So the first one, we got a trade credit. So what is a trade credit? Trade credit is basically an agreement in which a customer can purchase a goods without paying cash upfront and making the suppliers payment later. In a simple term, it was a credit extended by suppliers, allowing business owner to buy now and pay later. The second one here, we got a commercial paper. Commercial paper is basically a second form of short-term loan, which is made up of promissory notes from well-known enterprises that are mostly offered to the banks, insurance companies, pension funds, and any other businesses. The duration of commercial paper, usually their issuance are from 2 to 6 months. Although prime commercial paper rates differ, they are often marginally less than those of prime businesses loan. goods without paying cash upfront and making the suppliers payment later. In a simple term, it was a credit extended by suppliers, allowing business owner to buy now and pay later. The second one here, we got a commercial paper. Commercial paper is basically a second form of short-term loan, which is made up of promissory notes from well-known enterprises that are mostly offered to the banks, insurance companies, pension funds, and any other businesses. The duration of commercial paper, usually their issuers are from 2 to 6 months. Although prime commercial paper rates differ, they are often marginally less than those of prime businesses loan. In addition, basic limitation of the commercial paper market is that its resources are limited to the access liquidity to the corporation, the primary providers of funding, and it may process at any given moment. And the last one here, we got notes payable, also known as a short-term loan. For these sources of short-term financing, banks play a crucial role for it. When a company's financing requirement increase, banks are called upon to provide additional funds. At a loan maturity, the payment can be done in full or in installment over the courses for the loan.
Next, the component of current asset and current liability. Let's go to the current asset. The current asset account is a balance sheet line item listed under the asset section. The current asset also important because they are represent the liquidity of a company. The current asset has 5 components. The first one, cash, and the number 2, account receivable, and the number 3, marketable securities, and the number 4, prepaid expenses, and the last one, inventory. So let's go to the first one, which is cash. Cash are readily accessible and can be used for immediate transaction. Cash are short-term investment. They are highly liquid and easily withdraw and turning into physical cash. And the number 2, account receivable. Account receivable are any amount of money customer on for purchase of goods or service made on credit. And this outstanding customer balance are typically expected to be collected within 30 to 19 days or 1 year. And the number 3, marketable security. Marketable securities are short-term liquid security that can be quickly sold on a public stock or bond exchange without any loss in their value, such as bond, ETF, stock, and so on. And the number 4, prepaid expenses. Prepaid expenses is the cost that have been paid in advance but have not yet been incurred. An advance payment made for goods and services to be received in the future, such as insurance, rent, tax, and many more. And the last one of component of current asset is inventory. Inventory is a goods held by the company for sale in the ordinary course of business. Inventory include the raw material, work in progress, and finished goods. Inventory be converted into cash through the sale to customer. Next, the current liability. Current liability are obligation or debt that a company expect to pay off or settle using its current asset or by providing goods or services within 1 year or within the normal operating cycle of the business. Component of current liability basically include the account payable, account expenses, short-term debt, tax payable, and the last one, and earning revenue. Let's go to the first one, which is account payable. Account payable is amount owed to supplier or vendor for goods and services that have been reserved by not yet paid for. And account payable are usually short-term debt that must be settled within a specific period. And the number 2, accrued expenses. Accrued expenses is the expenses that have been incurred but not yet paid for. by the end of the accounting period. For example, wage, interest, tax, and many more. And the number 3, short-term debt. Short-term debt is any loans or borrowing that are due for repayment within 1 year, such as bank overdraft, line of credit, and short-term loan. And number 4, which is tax payable. Tax payable is a tax on to the government based taxable income earning during the current accounting period. Some of the most common tax owed are income tax owed to the government that have yet to be paid, payroll tax that have been held from an employee but haven't been paid, and tax collected from their customer and paid to the government, which are recorded as sales tax payable. And the last one, unearned revenue. Unearned revenue is a payment received from customer in advance for goods or services that have not yet been delivered. Unearned revenue is listed as a current liability because
Next, I will
it
explain
is
about
type
the
of debt
comparison about
owing
products
to
and more
the
suitable
customer.
for Kilia Berhad. The aspect that I will cover which are cash, account receivable, marketable securities, prepaid expenses, inventory. For definition, cash is a liquidity asset readily available for use. For account receivable is a money owned by customers for credit sales. Then for marketable securities is a short-term investment easily convert to cash. For prepaid expenses is a payment made in advance for future expenses. For inventory is a goods available for sale or in production. Then for classification, the five products which are current assets. Then for purpose of cash to provide liquidity for daily operations. For account receivable is to generate cash flow from credit sales. For marketable securities is to earn a return on excess cash. For prepaid expenses is to manage future expenses and cash flow. Then for inventory is to support sales and production activities. Then for liquidity, for cash is highly liquid. For account receivable is moderate liquidity, depends on collection period. Then for marketable securities is also high liquidity. Then for prepaid expenses is a low liquidity, benefits future period. And for inventory is a varies depends on turnover rate. Next, for conversion to rate is immediate. For upon collection from customer, for marketable securities, upon sales or maturity. Then for prepaid expenses is upon expense realization. Then inventory is upon sale of goods. Then I will cover about management focus, which cash is ensuring sufficient levels for operations. Next, account receivable is efficient collection and credit management. For marketable securities is maximizing returns and maintaining liquidity. For prepaid expenses, timing and amount of prepayments. And for inventory is optimizing stock level and turnovers. Then for impact on cash flow, for cash is direct inflow. For account receivable is inflows when collected. For marketable securities are also inflows when liquidated. For prepaid expenses is outflow initially, reduces future outflow. Then for inventory is inflow when sold, outflow when purchased. Next, I will explain about the comparison about product and more suitable for Kilia Berhad for current liabilities. The aspect that I will cover which are account payable, accurate expenses, short-term debt, taxes payable, and lastly unearned revenue. For definition, account payable is a money owed to supplier for goods. For accurate expenses is incurred expenses not yet paid. For short-term debt is a loans and borrowing due within 1 year. For tax payable is a tax owed to the government, and lastly for unearned revenue, which is money received for goods to be delivered. For the purpose of account payable, which to manage short-term obligation to suppliers. For accurate expenses, itu for account for incurred by unpaid expenses. Next, for short-term debt, is a finance short-term operational needs. Then for tax payable to fulfill tax obligations. And lastly for revenue, which is to fulfill future service commitments. Then for liquidity, account payable is a moderate liquidity, depends on payment term. But for accurate expenses, short-term debt, taxes payable and unearned revenue, they have low liquidity. Next, for conversion to cash, account payable is upon payment to suppliers. For accurate expenses, they upon a payment of expenses. For short-term debt, they upon repayment of debt. For tax payable, they upon a payment of tax. And lastly, for unearned revenue, they upon delivery of goods. Next, for management focus, for account payable, they negotiation favorable terms and time payments. For accurate expenses, they accurate recording and timely payments. For short-term debt, they manage interest costs and repayment schedules. For tax payable, they accurate recalculation and timely payment. Then, for unearned revenue, they proper revenue and recognition and service delivery. Then lastly, for impact on cash, for account payable is outflow when paid. For accurate expenses is outflow when paid. But for short-term debt, it's outflow when repaid. Taxes payable is also outflow when paid. And lastly, for unearned revenue, is also outflow when revenue is recognized. So, based on the comparison and the impact analysis that I have explained just now, account receivable emerged as the most suitable component to focus on enhancing profit and investment opportunities. Efficient management of account receivable can significantly improve a company cash flow, which in turn supports investment in growth opportunities and directly impacts profitability. So, account receivable is more suitable for Kilia Berhad to get a profit and to grow for many years.
So now I'll be talking about current asset and current liabilities based on Sharia perspective. So for current assets, there are 5, which is cash, account receivables, marketable securities, prepaid expenses, and also inventories. So for cash itself is halal, but it shouldn't involve in any haram sources such as interest, gambling, or unethical activities. As for account receivable, it should only be from halal businesses transaction which does not involve in any haram goods and services. As for marketable securities, it is permissible if it follows the Islamic finance principle such as no haram activities and also interest-based operations. As for prepaid expenses, it is allowed as long as the goods are halal and the prepayments shouldn't have the interest-based services and also in their products. And for lastly, inventory. The inventory should be involved in halal goods and it cannot contain any alcohol, pork, or any other haram products. Next is current liabilities. We start with account payable. So the account payable should be from halal businesses transactions, and the payments should be only made on time to avoid any late payment penalties, because it will become considered as riba, which is not Sharia compliant. Next is accrued expenses. It should only be from halal activities, and the expenses should not have any interest or payments from the haram good and services. And next is short-term debt. Short-term debt are most commonly haram because it involves in interest. But there are alternatives to it, such as murabaha or cost plus financing, musyarakah, which is partnership, and lastly mudarabah, which is profit sharing. Next is taxes payable. Paying taxes is generally seen as civic duty, so it is permissible because it follows the Sharia compliant. And lastly, unearned payable. It is permissible when the seller fulfills the obligation of delivering the goods and as the agreement, and it follows the Sharia compliant.
So guys, based on the explanation that have been made by my group mates, we can conclude that the best current asset for Kilia Berhad is basically a marketable securities. Why? Because its liquidity of asset is much more faster than the other components that I have stated before. Investing in marketable securities can therefore generate income for our company. Oh no, for Kilia Berhad company. The investment can also be earned while we manage the liquidity. So it's easy to convert if the company wants it. Regarding for the current liability 4, we believe that the commercial paper is the best for Kilia Berhad. It is due to the fact that due to the fact that the commercial paper is usually issued by a reputable and large company. The possibility of risk is small because we believe that the company is probably financially stable. Other than that, it also provides a large amount of credit to the borrower and low interest rate.